The Reserve Bank kept the cash rate on hold today at 4.1%, but said some further tightening of monetary policy may be required to ensure inflation returns to target. Governor Philip Lowe said the outlook for household consumption remains uncertain, with many households experiencing a painful squeeze on their finances. Joining me now is Sally Tindall, Head of Research at RateCity. Sally, thanks so much for your time. Rates on hold. No surprises there, but monetary policy does act with a lag. So have Aussie mortgage holders caught up with the 12 interest rate rises we've already had?
So there's typically a 2 to 3 month lag on when the RBA raises the cash rate and when that money comes out of your bank account. So make no mistake, the banks charge you that higher rate from about 10 days after the RBA decision, but they give you notice so that you make sure you've got enough money in your account. That means most variable borrowers have only just started paying for rate hike number 12, which was back in June. And you know what happens when you're juggling a tight budget? You make it the first month, you might put a few things on the credit card the second month, and then in the third month, it all blows up into smithereens. So we've still got a number of really critical months to play out, even as a result of that 12th hike back in June.
Cash rate's been on hold now 3 times out of the last 5 months. Do you think we're at the peak?
Look, I would say it's looking more and more probable that we're at the peak, but we cannot rule it out. You know, if COVID and forecasts or anything, you know, history has taught us anything is not to rule anything out. I'd say if you've got a mortgage, you plan for at least one more rate hike just to be sure, and put all the chatter about rate cuts out of your head at this point in time, because for most families, things are going to get slightly tougher before they get better, even if the RBA does not move a muscle.
Yeah, 12 rate increases since May last year. Just roughly, how much have mortgage repayments gone up over that time?
Oh, they've just gone skyrocketing, haven't they? For someone with a $500,000 loan at the start of the hikes, their repayments have increased by $1,134. On $1 million mortgage, you're looking at a $2,269 increase every single month. That's not a one-off expense. That's not just like a, one burst hot water system. Yeah. That is every single month they have to cough up with this money. And Australians have been incredibly resilient to these rate hikes so far. But we've just seen in the latest APRA data that's come out for property exposures, arrears are starting to creep up. They're still, historically speaking, incredibly low, but APRA has said they do expect that number to rise through to the end of the year.
We are actually seeing a lot of stock on the property market as well. So if you were to walk into a bank today, what are some sort of average rates that you might be offered for a loan right now?
Yeah, it's a really good question, because who would know? It's really hard to keep track. Okay, so on our database, we've got still 3 ongoing variable rates, so we're excluding introductory rates.
Sure. 3
ongoing variable rates under 5.5%. So that's really competitive.
Yeah.
A good rate would be around 5.75. The big 4 banks, the vast majority of their rates are in the 6s, well into the 6s. The exception here is Westpac. They've got an introductory rate at 5.99 for the first 2 years, and then it goes up by 40 basis points after that. But if you are shopping around, if you're in the market, the lower the variable rate you can get, the more money you are likely to be able to borrow. And that might be crucial. That might make or break a winning bid at what are still very heated auctions that are going around the country.
Yeah, definitely. We've seen a lot of auction activity actually the last couple of months. But conversely, we've seen savings rates go up pretty sharply over the past 12 months. I mean, obviously, rates are on hold today. We're not going to see any movement there, are we?
Could not rule that one out either. We actually have seen them inch higher and higher, but I'm only talking about the market leaders here.
Sure.
So Me Bank, they created a new savings product just the other day, posting a 5.65% rate, ongoing savings rate. That is fantastic to see. It's the highest in our database now, but banks are still picking and choosing which savings rates get a boost, which miss out. So, you've still got Westpac, existing customers with an eSaver account, which is, quite a number of customers out there, 1.1%.
Wow.
1.1%. It's crazy. The best of the big 4 in that category of online savers for their ongoing rates is CBA at 2.2%. But even that is just paltry considering the cash rates of 4.1.
And the big question that a lot of people want to know, how long do you think it's going to be until interest rates actually start to fall in Australia?
It'll be interesting. I just think we need to rule out any possibility of it happening this year. I think that's fair to say.
Forget about it.
Yeah, forget about it. Because, the RBA is still really cautiously watching the data, but they don't want to, issue a rate cut only to see inflation just kick back up again. We saw it in the statement today. The RBA is very worried about services inflation, so I can't see them cutting rates anytime soon. Big Four bank economic teams, they're all predicting cuts in 2024, but the number of cuts and the timing of those cuts varies wildly. Yeah. You've got CBA, they're CBA, they are saying the first cut will be in March 2024. ANZ, they're saying the first cut will be in November 2024. What a huge difference. Wow. Just between those two banks. What that tells us is, the best and brightest economic minds are disagreeing on when these cuts may or may not come about. So we need to put the fortune-telling cards in the drawer and just concentrate on the months ahead.
Sally Tindall, thanks so much for your time.
Thanks for having me.